Happy new month, everyone. It's the first day of the second half of 2021. Good morning and welcome to Business Morning on Channels Television. I'm Ini John Mekwa.
And I'm Blady Williams. Thank you for joining us. Let's take a look at what's in the news. President Muhammadu Buhari has approved the payment of some critical aspects of the outstanding pension liabilities of the federal government under the contributory pension scheme. In a statement released, the National Pension Commission says the payment will cover outstanding accrued pension rights for verified and enrolled retirees of Treasury-funded MDAs that retired but are yet to be paid their retirement benefits. PenCom explains that the funds have already been made available for the settlement, while the affected retirees and employees would be notified in due course by their respective pension fund administrators.
Meanwhile, oil prices traded sideways today as investors waited for a decision from key producers on whether they would maintain or ease supply cuts in the second half of the year. Brent crude for September edged up 1 cent to $74.63 a barrel, while the U.S. West Texas Intermediate crude for August was at $73.46 a barrel, down 1 cent, but near its highest since 2018 of $74.45 a barrel. WTI rose more than 10% in June, while Brent added over 8%, touching highs since 2018 as summer travel picked up and more people got vaccinated. But renewed lockdowns in Asia amid the spread of a highly contagious COVID-19 variant capped demand. In response to rising demand, U.S. crude stockpiles fell last week for the 6th straight week. Data from the Energy Information Administration showed Brent was seen averaging $67.48 a barrel this year, and WTI was $64.54, both up from forecasts in May.
Meanwhile, ahead of the meeting today, Opec says it expects global oil demand to rise by 6 million barrels per day in 2021. According to the Secretary General of the Oil Producer Group, Mohamed Bakindo, about 5 million barrels of what projected volume would be coming in the second half of the year. The forecast is coming less than a day before the 15-member OPEC Plus alliance prepared to meet today to discuss a potential extension of its current oil supply deal beyond April 2022. Meanwhile, investment bank Goldman Sachs says it expects demand for oil to rise by a further 2.2 million barrels by the end of the year.
And with this projection of 6 million barrels per day and the petroleum industrial bill likely to be passed today in Nigeria, the petroleum sector in Nigeria has a lot of upcoming activities. Which way will it go? Juliet Adenuga, head Treasury Financial Derivatives Company, talks to us about that. And that's our first conversation on Business Morning. So the conversation now, and OPEC Plus meeting is today. We have Juliet Adenuga, Head Treasury of Financial Derivatives. Thank you so much for joining us, Juliet.
Thank you for having me.
Great to have you.
Yes. So the meeting is today, and the group is already projecting that oil demand will rise by 6 million barrels per day from the 5 million from this second half of the year. How will this affect Nigeria?
Okay. The projection, it's based on the outcome of the Iran deal discussion with the U.S. There's been a sanction that is, cutting on the production and other activities that has to do with Iran's, oil production. So, in global terms, it depends on what the outcome becomes. Already, Iran is gearing up towards that. But for Nigeria, we know that Nigeria is part of the OPEC Plus.
Yeah.
And OPEC Plus is working on increasing output by a 500,000 barrels per day. We know that that is not going to be significant enough to have an impact on price. It's not going to affect the price of crude, because OPEC is just about, the total production by OPEC is just about 33% of the 96 billion million barrels per day produced globally. So if there is a 500,000 increase in output by OPEC, it's just going to add about a 0.5% increase in total global output, and just about a 1.5% increase in their own output. So it's not going to have much impact. Nigeria is a price taker in all this. We are just more, we respond more to output.
Yes,
because we earn more when more is produced. But you know what is happening with OPEC Plus? They are controlling supply to ensure that they maintain that price that makes them still gain. because they are oil-dependent economies and they cannot play with what happens.
So what do
in the
you
market.
think will happen with the issue of, I mean, the UK, a lot of countries are closing their borders, at least for tourism, with the UK because of the Delta variants, and this is also reducing demand.
Yes.
So what do you think is going to, how is that going to affect it?
Yeah.
With reduction in demand, it's going to affect what is earned. At the peak of COVID, you know how this OPEC Plus agreement started? At the peak of OPEC, they knew they were in danger. Why? You cannot just let them produce and everybody dump into the market. If you produce and dump, it will crash price.
Yes.
And all of us are going to be in trouble. So they had to influence, kind of put a bottom on the price. So if closures begin to take place because of Delta again, OPEC will still come into play to ensure that they control supply. And once supply is controlled, it affects Nigeria. I hope you know that Nigeria is still under sanction.
Yes, we're under sanction, 1.5, yeah.
We are still on 1.3. So by the end of, probably by July, we'll start producing.
This is July.
Yes,
No,
yes, now we will start producing. So it's not a free-for-all, just do anything you like. You are in a cartel, you go by the rule. So if globally it's going to become disadvantageous in terms of demand, Nigeria will have to go with OPEC. OPEC will still work out something that will make them not to lose out in the long run in terms of pricing. Because they gain from pricing.
Okay.
They just take price and they gain from output. So they manipulate output so that they can earn optimally.
All right, but what kind of price action can we expect after the meeting?
After the meeting,
Yeah.
I've told you that the 500,000 increase won't have much impact on global prices.
So we'll still stay within this
still going to stay
range.
around this range, 70,
Okay.
80, if anything
All right.
will happen.
So we're hoping that even though the lawmakers have missed the June target for the PIB, and they have said that we should get it today, what is your expectation?
I'm expecting that it's likely to still, if it doesn't come out today, maybe by tomorrow, because it's been long overdue.
Over 10 years.
10 years.
We've
That's
been
a
on this
long
matter.
time.
I really don't understand why it's taking so...
That's a long time.
It's something that we must get to, because it's supposed to open up investment. It's supposed to bring relief. We know that one of the key things is this subsidy issue. If it is passed, that means that subsidy becomes illegal. And we know what subsidy will do, even though it's going to bring increase in price. Initially.
And you projected about 283 per litre?
That is that's the landing cost now. The government is paying 118 naira per litre of fuel in Nigeria buys at 165 in the filling station. That is huge. If you bring it down home, even what leaks out as illegal, like smuggling gets down to as high as 3.54.
I think even the NNPC complained about smuggling last week.
Mm-hmm.
Yes.
Because suddenly output shot up to about 90 million liters per day consumption. But we know in reality we're on 60 million. So what happens to 30 million? People are smuggling out.
But
People are cashing out because it's more beneficial. It's more beneficial for them.
Yes,
because
when
they
they sell it
forex.
illegally, yes.
But you did mention that we should expect price increase for now. For the PMS, that's when if the bill is actually passed.
Yeah.
So is it possible that we could see, the price taper down after a while? Because you said the price will increase for now.
The price, presently, and actually the government already announced today that for July, there will be an increase.
Yes.
So we are resting
We have
on
our
that.
monthly relief.
So we are resting on that first. For now, we know there won't be, but we have to understand that there is a direct relationship between landing cost and pump price. And anytime it is increasing, that means that the landing cost is higher. And that means that the government is subsidizing more. We should bear it at the back of our minds and know what is actually happening. And once the government is subsidizing more, capital projects are suffering.
Exactly. Infrastructural
deficits will keep increasing. We will not get to the level of output we are supposed to get to as a nation. Jobs won't be created.
Refineries can't be fixed.
They can't even be fixed. And people will keep suffering. So it's a cycle that, if not handled from the root source, we'll just keep dancing around it.
Vicious cycle.
Okay, so let's move to some other hot issues now, and hope that by the end of today we would say that the PIB has been
hopefully,
yes, passed. So we also have that in February, the Minister of Power revealed that the federal government spends over 50 billion naira monthly to subsidize electricity. That's another important thing in the country. In April, the FG was at loggerheads with World Bank because the World Bank says that $1.5 billion was being spent. Now the issue of electricity subsidy is coming again. We're talking of how to discard the one for PMS. We're talking of the one for electricity. Where are we?
In actual sense, we can't really discard subsidies till we do away with them. There was a reduction about
30 billion?
40%. It
Yes,
was 50.
yes. Yeah.
It was 50 billion that the federal government
So now it's 30
It's now
billion.
30. Do you know what's the cost? Discos have improved in their collection. Now they've become more efficient. Those leakages, I know you're a NEPA official, let me pay 2,000 instead of 20, all those, they've been able to efficiently block those leakages, and they've been able to collect more. And with that, you notice now that the government is relieved of about 20 billion, and all things being equal, hopefully, they can be able to have room to play around and invest in more capital-intensive projects that will benefit everybody.
So more metering, I want to believe. We have maps, they're supposed to mop up the unmetered Nigerians. So more metering, more revenue, less subsidy, more money for infrastructure. Is that the equation?
That is it. But, people are not eager to hear that. You know why? Because the problem is not actually with paying the tariff. The problem is supply. I know of a friend that spent 20,000 naira one of the weeks in June for alternative source, buying petrol. Light was so poor. So Nigerians are not really complaining, because in actual sense, Nigeria is one of the countries that pays the lowest electric tariff in Africa. So there's still room. And we should understand that the power sector is capital intensive and needs funding. So for private investors to even be attracted to the sector in the first instance, price should be attractive enough for them to want to come in and make profit. So there's still room even for increase in tariff. We should understand that. Okay. But the challenge Nigerians have is, it's not that you want to, they don't trust. They have trust issues, because these things have been happening over and over. You tell me you want to increase my tariff. I know they increased at least once last day. You increase it. I don't get it. Someone like me, I was on about 7,000 per month before that increase. I've gone to 15,000. And I still spend up to sometimes 20 to 25 on alternative sources. So the problem Nigerians have is not with,
but it
giving them
it still puts
improving on the
pressure on
supply.
disposable income, though.
Of course.
Disposable income is, I don't know how people are surviving. Disposable income is dead.
But when the privatization of the power sector was announced and we're told private sectors are coming in, I think a lot of people just expected that the private sector will come with some money, get infrastructure and get the sector working. Then we will pay. But I mean, this is how many years down the line, and we're still talking of what the government needs to do this, we need to do this. What happened?
The challenge is, most times when we talk about deregulation, it's not usually total in Nigeria. It's not usually total. There'll still be that hand somehow, not the invisible hand, the hand manipulating things somehow. Because if on a good day it was fully deregulated, then would have been over this now. Because if I, a manufacturer of, let's say, plastics, have been having steady supply of electricity or power for the past 5 years, by now my operating costs would have dropped, and it would have affected the price of that plastic.
Exactly.
So in the long run, people would have started benefiting, reaping from that. But because
in fact, like you talked about the disposable income, it will also come around to affecting that.
Even it will create employment. People will get more jobs. People will have, their incomes will get, stronger. Yeah. Because once the price is contained, that is what contains inflation.
Okay. But in February, the World Bank approved a $500 million support to the government in improving electricity, the distribution sector. How well has that impacted the sector?
What I know they did was to, make available more meters for people, because it's actually more beneficial to use the prepaid than to let them determine. They can estimate and come with 70,000 for you. But I know it had helped them to be able to get meters and to be able to replace enough for people. And most times people didn't have to pay for that. So I think that in that direction, the challenge we have here is not in this country mainly is how do we appropriate what we've gotten? Most
accountability?
Times, accountability. There is no rule of law really in place. There is institutional decay. Do you get? So that keeps affecting the results we get. Wow. In everything we pursue.
Just before our time is up, let's not forget our commodities.
Oh, yes.
So commodities market, the price of flour is up by almost 10%.
Wow, that's big.
What happened?
And it's not ending there, because...
It's still going up.
Oh, it's likely to still go up. It's on 15.5 now. it's likely to still move up to probably 17 because they are getting forex from $470.
There we go
It has
again.
gone up.
That's a forex.
So how are you going to afford your bread now?
It hasn't happened to you. My daughter, I had to drag with my daughter the other day. A loaf of bread I usually bought 350. She came home and said it was 500. I was sure they cheated her.
Wow.
But alas, it was the price.
So we're going to go
already,
dieting. We'll do vegetables.
Vegetables.
So-
Are they cheap? Are they cheap?
What alternatives do we have to flour?
wonder.
More expensive alternatives. Anyway, take us through the other, commodities price movement.
Yes, the FX index increased by 2.58%, just meaning that there wasn't so much difference from what we had last month. You notice that tomatoes and pepper, they are the most expensive now. Their percentage is out of, and usually it's seasonal to a large extent at the peak of rainy season usually, because those crops are not really rain friendly. At the peak of the rainy season, they don't have it, and we know that production hasn't and planting hasn't been. It's been suboptimal because of insecurity issues, and the rains came a little bit late this year. So apart from that, apart from the flour and the tomatoes, the gari, a little increase, but basically others like rice. Rice, festives.
Rice is unchanged.
It's still flat, a little bit flat. Cement, when the rain is high up there, people don't, construction goes down, and then even building, because it becomes not so active. So in general, there hasn't been so much, things haven't dropped, the price of things haven't, I don't know if the market you go to, my own market, things are still expensive.
Well, I see the agricultural commodities, I see wheat is down, corn down, only cocoa is actually up at this moment. So what's driving that?
For the cocoa, what could be driving cocoa now might be the fact that cocoa was initially, cocoa we know is in Nigeria, for instance, cocoa isn't what we depend on for export.
But I mean, last time we spoke to FDC, they said there's a new variant now.
Yes, of course.
Yeah, that is more productive.
Yes, but it is new. It's actually new here.
Yes.
We've not yet fully, started implementing and maximizing it. So it's still relatively
we're still looking for how to spread
how
it.
to spread it and how to sell it. Sometimes you really need to even sell it to these farmers for them to buy it and buy into the idea and, come out of the, the traditional way they've been doing it.
Because somebody like Laddie is very old school.
He's very old school and very rigid.
He doesn't like All right, we have to thank you so much, Juliet, for joining us this morning. Good to see you instead of just doing virtual.
Thank you for
in person.
Yes. Good to have you, and thank you so much for sharing your opinion with us. Well, we'll just take a break now. After the break, we'll review how Nigeria's economy has done so far, the first half of the year, going into the second half. You stay with us. It's Business Morning on Channels Television.
Welcome back. You're still watching Business Morning. And as the second half of the year begins, it is a good time to take stock of the past 6 months and outlook for the next 6 months. Commodities Securities has done that in its report, Navigating the Uneven Path of Recovery. Gbolahan Ologunrona, analyst with Commodities Securities, joins us this morning. Hello, Gbolahan. Great to have you.
Good morning, Laddie. Thank you for having me.
Good morning. Good morning. Happy New Month. How would you assess the performance of the economy in the first half of the year, and what do you expect in the second half of this year?
Yeah, so for us, the performance of the economy has been largely unimpressive in the first half of the year. Of course, we still have to agree with the fact that we are coming out of a recession in the prior year, induced by the twin shocks we faced due to the pandemic and the downturn in oil prices. However, we saw the economy recovering earlier than expected in the fourth quarter of last year, and that recovery extended into the first quarter of this year. We saw the economy growing by 0.51%, an improvement from 0.11% we recorded in the fourth quarter of last year. In terms of inflation, inflation maintained an uptrend in the first 3 months of the year due to, of course, persistent security challenges across major states of the Federation. However, in the months of April and May, we saw inflation moderating marginally, which we think was due to more or less idiosyncratic factors, such as consumers more or less anticipating higher prices in the month of March due to, of course, the Ramadan Ramadan season, and they more or less front-loaded their purchases in the month of March, rather, because of inflation expectations for April. And in terms of the currency, the CBN has also devalued the currency to about 410 at the INE window. And since then, the CBN has also sort of equalized the official rate to the NAFEX rate. So, in a nutshell, macroeconomic indicators have not really been so impressive. However, the economy is poised to remain on the growth trajectory over the second half of the year.
And your report also shows that you expect headline inflation to moderate in the second half of the year. What considerations did you take into to come to this final?
Yeah, so like I mentioned earlier, we've seen inflation moderating over the past 2 months. So for us, looking ahead into the second half of the year, we expect that that trend will persist due to a combination of factors. Firstly, we had high base from the prior year, so we think that will be instrumental in sort of pushing inflation downwards in the second half of the year. Secondly, we are also cautiously optimistic that the partial reopening of the borders late last year should sort of provide respite for food items, as more goods are now being imported into the country. And of course, if you look at our current account data, we have seen that imports has increased sharper than we initially projected, as due to the reopening of the economy. So we expect that that should be a positive for domestic prices in the second half of the year. In addition to that, we also see scope for improved harvest season. So unlike last year, when a number of farmers had to comply with lockdown measures and activities on major farmland was largely hindered due to the lockdown measures that were implemented by the federal government. So this year, we understand that the government has more or less fully reopened the economy. So we expect that activities on farmland should improve this year compared to last year, even though we have still continued to experience persistent security challenges across the country. So we are cautiously optimistic that harvest season should be better than last year. And of course, that would also be positive for consumer prices, which I think has been the major pressure point for the uptick in inflation we saw in the first 3 months of this year.
Okay. Well, still looking at your report here, you see it says that you see a scope for improvement in liquidity conditions in the FX markets, given the knock-on effects of the rally in oil prices and the proposed Eurobond issuance on the FX reserves. How do you see this happening?
Yeah, so like I mentioned earlier, the CBN has devalued the currency by about 3.9%, sometimes on the back end of February. And then thus far, we've seen that the currency at the INE window has been somewhat stable at around 410 levels since that devaluation. So for us, looking into the second half of the year, we are looking at two major events that will, of course, bring some respite and improve liquidity conditions in the FX market. And particularly, maybe we should now expect a gradual reduction in that premium of about 21% that exists between parallel market rates and the NAFEX rate. So our view is underpinned by the fact that federal government is, we expect that federal government should issue a Eurobond in the international market, and we are looking at a record issuance of about $4 billion. And we expect that that should be concluded by the end of this month. In addition, we also think that the sustained rally in the oil market would continue to provide support to the central bank's external reserves, and that should put the CBN in a better position to step up their intervention across various stratas of the FX market. And thus far, if you would agree with me, we've seen consistent decline in the central bank reserves, and that's because the CBN is trying to improve interventions both at the INE window and other unofficial channels. So we think the CBN would continue with that intervention over the second half of the year. And with oil prices at these strong levels, about $75 per barrel, we think that would remain positive in terms of supporting central banks' foreign exchange reserves to be able to increase dollar supply to the market.
Well, apart from your report, there's also a report by the World Bank, and it says that a full decade of economic growth in Nigeria is likely to be lost by the end of 2021. Do you agree with this, and what factors do you think they consider to come to this conclusion?
Sorry, come again. I didn't quite get to that question.
So apart from your report, there's a report by the World Bank, and the report indicates that Nigeria is likely to lose a full decade of economic growth by the end of this year. Do you agree with that? And what factors do you think led to this conclusion?
Yes, certainly. We think the views of that institution are spot on. So, I mean, prior to the pandemic, the country had a number of structural challenges that needed to be addressed. If you look at prior to, of course, 2020, when we had the pandemic, we had challenges with regards to, subsidy programs bordering on the power sector and oil and gas sector. And up till now, we are still sort of battling in order to sort of overcome those challenges. And like you mentioned earlier, we still have issues with fuel subsidy. We still have issues with electricity subsidy, which is currently at about 30 billion on a monthly basis. So the implication of, all of those structural challenges is that it would continue to, limit the growth in the economy, in which case you are likely to see growth in the economy still below population growth, which implies that per capita income would remain on a downward trend. And of course, we are now looking at socioeconomic indices like poverty level, income disparity. All of those indices would remain broadly negative. So for us, we think that as long as these structural challenges remain unaddressed, the growth that we would see this year would also remain, of course, still below the level that is needed to sort of address those socioeconomic challenges that are confronting the economy. So for us, we think that this year it should be a turning point for policymakers to take those bold decisions that have hindered the progress of the economy over the years, so that we can now, of course, have a more broad-based, inclusive, and sustainable growth that would translate into improved job creation for the populace, reduction in poverty level, and also reduction in the wide income disparity and inequality that exists between the rich and the middle class.
All right, Bola. The World Bank also believes that there will be a constant decline in the country's GDP per capita despite recovery from recession, projecting the country's population to grow faster than its economy. Do you see any way out of this?
Yes, certainly. Like I mentioned, what we expect is that growth in the economy would continue to lag population growth. So for us, we estimate that the economy will grow by about 2.6%. But of course, if you look at that number, it looks, somewhat impressive. But you need to also, acknowledge the fact that we had low base last year, particularly in the second and third quarters of the year, when the economy declined by 6% and 3% respectively. So this year, you're likely to see the GDP numbers for Q2 and Q3 being flattered by that low base effect we had in the prior year. But notwithstanding, our growth expectation still remains below the population growth of about 2.7% to 3%. So that implies that, for GDP per capita, it will still remain on a downward trend. And of course, for us, we think this reinforces the need why government needs to sort of address those structural challenges, the insecurity challenges we have that is also affecting food production in major states across the Federation. We think these are burning issues that needs to be addressed. And for the monetary authority as well, we think, the currency crisis is one that needs urgent attention this year as well. The CBDR framework increase investor confidence and also sort of bring some flexibility in the pricing framework of the currency. So we think these are issues that, of course, the CBN also needs to address if they are to sort of encourage the inflow of long-term capital that would support capital formation and increase job creation in the economy. So this, we think, for both the fiscal and monetary authorities, those structural challenges should be addressed this year if they are to sort of lift growth above population growth and ensure that GDP per capita improves in the medium to long term.
All right, well, the bank commended the President Buhari, for taking bold steps in reforming the country's deteriorating economic condition while advising the government to deepen its recent reforms that allow private sector investment for speedy economic recovery. What steps do you think they are referring to?
Yeah, so for us, we think that, those reforms still borders around two major sectors. If you look at the power sector and the oil and gas sector, so we think these are critical sectors that sort of have huge potentials in terms of supporting the growth of the economy and even accelerating private sector investment. So for the fiscal authorities, for one, there is need to sort of fashion out a way of eliminating the subsidy programs in these two sectors if they are to sort of encourage private sector investment. For the power sector, like you mentioned, there was a lot of optimism when the privatization exercise was implemented some years ago. However, the result has not really met expectations due to the fact that most of those distribution companies have not been given that freedom to sort of set tariffs that are market reflective. And as long as you have government interference in sectors where you don't allow private sectors to sort of determine prices in line with current economic realities, that would continue to hinder private sector investment. If you look at the oil and gas sector, we still have the petroleum industry bill hanging in the air. And this is a bill that is expected to unlock billions of dollars of investment across the entire value chain of the oil and gas industry. So for us, we think the fiscal authorities should, pay a lot of attention to these critical sectors and take those good steps to, address those challenges, implement those reforms if they are to sort of jumpstart the economy and place it on a more sustainable path of growth in the medium to long term.
Yeah, so we hope that PIB will be passed today, so we'll stop calling it a bill and it becomes a law, and we'll see all the potentials and the promises that it holds. Thank you so much, Gbolahan Olugunro, for sharing your thoughts with us this morning, and enjoy the rest of your day.
Thank you, for having me. Have a nice day.
You too. So for the opening call to the market, 2 days, the 2 last days of June ended in the positive zone, and that puts a big, wide smile on Will's face. Will, congratulations.
Good morning, Ini. Thank you so much. But what a fantastic close for the month of June there, and what a way to end the first half of the year. The local bourse extended Tuesday's bullish momentum. We saw activities in the consumer goods counter pick up the market as investors were looking to rebalance their portfolios in Nestle, which was up 10%, driving the all-share index higher. Let's look at the numbers. The all-share index advanced by 0.71%. to 37,907.28 points, and which has added a whopping 139 billion naira to the NGX equity cap. Month-to-date and year-to-date losses now have moderated to 1.4% and 5.9% respectively. However, the total volume of trades fell by almost 7% to 213.70 million units, while value was up 3.23 billion naira, and all traded in 3,522 deals. Wema Bank topped stock trades by volume at 18.31 million units, while MTN Nigeria led the value chart. Sectoral performance was mixed. We saw gains in the consumer goods and oil and gas indexes. Banking, insurance counters recorded losses, while industrial index closed flat. Now, to talk more about, throw more light on the activities in the market is Kayode Oluyemi, a stockbroker at CSL Securities Limited. Good morning, Kayode.
Hi, good morning, Will.
Good morning. It's great to have you here.
Thanks for having me.
We saw that the consumer goods dominated yesterday's trading session. We also know that Flour Mills released their audited financials for the year ended March 2021 with profit after tax growth of 127% year-on-year. Meanwhile, Nestle's share price has been flat at 1,400 naira for about a month now. What would you say drove investor sentiments in those sectors, in those components?
Yeah, so yesterday we saw the consumer sector do very well on the back of the gains, Nestle and Flour Mills. For Flour Mills, like you rightly mentioned, they released the numbers yesterday, and then the market reacted positively to the strong growth in earnings. For Nestle, what we saw there was an aggressive buy order in the closing moment of the session, about 120,000 or thereabouts, and that sort of drove the price up 10%. The sense is that was probably institutional investors trying to rebalance their portfolios for the last day of the quarter. But the numbers, we're expecting the numbers from Nestle to be good on price increases and improved volumes as the economy continues to recover. So just the things that drove the performance there.
Oh, that's really wonderful to know. What would you say would be your outlook for the second half of the year?
I'm mostly optimistic, cautiously optimistic about the quarter. We are expecting the second tranche of the Dangote cement share buyback. We'll also see improved earnings just based on the fact that this time last year, we had the session and all that. And as the economy continues to recover, we'll probably see earnings improve. And that should probably drive performance in the market.
Fantastic. Thank you very much, Kayode. That was Kayode Oluyemi, stockbroker at TSL Securities. Now, at the listed market, there was an uptick in the index by 0.01%, so leaving the driving the index up by 754.88 points, and the market cap was 536.58 billion naira. Trade increased yesterday by more than 300%, valued at 591.01 million naira, and traded in 45 deals. Compared to Tuesday's trade, the value of transactions dropped by 68%. And of the 5 securities traded yesterday, only the NGX stock price declined by 84 kobo. In the fixed income markets, we see that the bond trading was mixed as the average yield stayed flat at 11.7% across the benchmark curve. The average yield was flat at the short and mid segment, but dropped at the long end due to high demand. Trading in the treasury bills was quiet. Total trade volumes were lower compared to the previous day. Yesterday's investors were focused on the treasury bills. Primary market auctions, this kept the average yield flat at 6.6%. But to talk about the activities in the fixed income market, we have Caleb Alimi to talk to us about that. Good morning, Caleb.
Good morning. How are you today?
Yes, Caleb. What an oversubscription at the Treasury bills auction yesterday by almost 500 billion naira. Tell us more about it.
Oh, interesting. Yesterday's primary NTB auction was, like you said, oversubscribed. So the demand of 100 trillion, like you mentioned. Interestingly, DMO offered just about 81.7 billion, but sold about 103 billion across 3 maturities, the 91 days, 102 days, and the 1 year. The most interesting will be the 1 year paper, where demand was around over 400 billion, and what they had an offer was just a portion of that, so about 58 billion. They ended up selling about 158 billion of that paper at the 9.15, while the 91 day and 102 days rates remained the same at 2.5 and 3.5. We've seen the 1 year paper continue to drop. From the last auction it was 9.44. The auction before that it was 9.6, and now it is 9.15. We expect the demand to continue as asset managers and other real money investors continue to look forward to putting their investments at the long end.
Oh, thank you, Caleb, for your insight. We're hoping to see yields climb up for some investors because the yields have been dropping in the bonds market in particular. Ini, that's what we have for you today.
Higher yields from you, Will?
Yes, definitely.
All right, thank you so much, Will. Well, we'll take a break now. When we come back, we'll head over to London. Do stay with us. You're still watching Business Morning on Channels Television. We are now heading to London, where Juliana is standing by. Hello, Juliana. Good morning. And happy new month, Juliana.
Good morning, Innie. Happy new month. It's the second half of the year.
So from today, the government starts to wind down its flagship job support scheme. What does this mean for both employers and employees in the UK?
Well, it means a lot. About 1.5 million people are still on the government's job support scheme, or the coronavirus job retention scheme, otherwise known as furlough. 1.5 million people is about 1 in 20 of those who are employed in Britain. And from today, the government support reduces from 80% to about 70%. So employees will have to top up the remaining 10%. And it has left some people concerned, even though much of the economy is opened up. There are still so many parts of the sector, including the nighttime economy, that hasn't been given the green light because full opening of restrictions was extended from the 21st of June to what we hope will be the 19th of July. The Bank of England have always said that once furlough does come completely to an end in September, then low unemployment is expected potentially to peak at about 5.5%, which is a major concern. This is the time where the Chancellor has said we will start to see whether jobs can be viable or not viable. The furlough scheme has cost the British taxpayer about £64 billion. At its height, it was supporting 11.5 million people. And according to the Resolution think tank, it's mainly older workers that are still reliant upon furlough, and those who work in the travel and tourism sector. So at the end of the month, we'll start to see whether or not this new increase by employees will affect the unemployment rate.
We'll certainly see. Well, the electric car plan for the UK has received a boost with Nissan's $1 billion investment plan. What are the details?
Yeah, this is a massive, massive story, Innie. All media are camped in Sunderland at the Nissan plant as they made that pretty significant announcement that they're going to be investing £1 billion into creating the UK's first gigafactory. It's hoping to be open by 2024, where under these new Brexit rules, UK manufactured cars must have the majority of UK-made components. And of course, in 2030, the British government's own legislation says that no new petrol or diesel cars will legally be allowed to be made in the UK. So the rush to go electric is definitely on. We spoke earlier this week about the Society of Motor Manufacturing. They conducted a recent report showing that the UK is pretty much falling behind its competitors. America and Germany in particular are going full speed ahead by offering grants and allowing more production of these lithium batteries, which are the key component to making electric vehicles. But Nissan have stepped in. It's a big story because it's going to provide 6,000 jobs, which is really going to level up the northeast of the country, as well as UK car manufacturing as a whole. Lots of suggestions and little raised eyebrows about just how much the British government got involved. Some are saying that the British government put about £450 million into this investment. But according to the Prime Minister, Boris Johnson, this is money well spent because it is going to increase electric car production in the UK and, of course, be a long-term investment into job creation in the northeast of the country that really is depending on that right now.
Yeah, well, talking about clean energy, that's the future. Well, thank you so much, Juliana. And at 1:30, Business Incorporated, we'll talk to you again at that time. Enjoy the rest of the day.
Absolutely. Thanks, Annie.
So we'll head over now to the crypto market. Ladi, do we have good news now?
Well, not exactly. We still have a Bitcoin trading sideways. We have Bitcoin still in the red and a couple of altcoins, but surprisingly, we have Ethereum. Ethereum is in the green this morning. Total market cap, $1.39 trillion. It's down about 2.49%. Still below that $2 trillion level. 24-hour volume traded in total market, that's Bitcoin plus the altcoins. We have $86.23 billion, down 9%, and Bitcoin dominance is at 45.28%. Price of Bitcoin this morning, $33,588, down 4.14%. Remember, it did get rejected at 36,000. And an analyst I spoke to said we could see, more down movement for the price of Bitcoin. 24-hour volume traded, $34.90 billion. Looking at the charts here, the 4-hour charts, we have Bitcoin at the lower region of the Bollinger Band. See, volume is actually drying up there. And the MACD is looking towards the bearish section there, filling up the red histogram. And now we see the price of Ethereum, $2,167. up about 1.32%. 24-hour volume traded in Ethereum, $27.23 billion. Top odds by market cap is all red in that counter. BNB below $300, down 3.58%. We have Cardano at $1.32, down 1.32%. And Dogecoin there, 24 cents, down 4.55%. If you look at coin market cap, you see that the meme coins are not doing so well. We have the likes of Shiba Inu, the Tika, all of them, they're not doing well. So you should be watching this Dogecoin to know if you want to play with those meme coins at the moment. XRP is still below $1 at 66 cents, down 2.70%. And the top 5 gainers, we have MakerDAO up there at $2,708. The governance token for the MakerDAO platform is up 15%. And XDC at 8 cents, up about 13.68%. We have Engine Coin. This, we have the NFT platform there, gaming NFT platform at $1.14, up 7.21%. And CHSB, 58 cents, up about 5% this morning. And Aave is at $241 this morning, up 4.66%. Looking at top 5 losers, we have UMA, $9.33, down 11.14% this morning. Filecoin, $56.35, down 8%. And Ethereum Classic was actually inching up. Yesterday we had Ethereum Classic, one of the top gainers, but today it's down 7%, having that pullback there. Same as Internet Computer. Remember, Internet Computer started first day of listing, traded at $700. It's at $45 today. Got as low as $28. So if you got in there at that $28, you'd be up right now at $45. It did top out about $60, down 7% this morning. So looking at the market, it's going sideways. Many analysts believe that Bitcoin, especially JP Morgan Chase, they're calling for a $25,000 Bitcoin. We don't know how that's going to happen, but with the way the market is going, Bitcoin is not looking really strong. So if you want to trade this market, you need to be sure if you're going to stay in the stable coins or you want to stay in Bitcoin. Because if you stay in Bitcoin, you're not going to lose sats, but you will lose dollar value there. If you stay in the altcoins, when Bitcoin goes down, they go down in dollar value and also in sat value. So, Ini, I know you're calling for a $10,000 Bitcoin.
Yes, that's what I'm waiting for.
I know that's the price you're waiting for, but JP Morgan Chase is calling for $25,000, way above your prediction.
I'll have a talk with him and we'll come to an agreement and I'll let you know what we agree on.
Yeah, so the market is not looking bad. Still looking at the Bitcoin dominance there. We see the Bitcoin dominance is inching up. So obviously the altcoins maybe that will signal the end of alt season.
You know, one of, I think you mentioned Internet Computer.
Yeah.
Because these are the reasons why we always say, we're not giving financial advice here. And for you to get involved in this market, you have to be knowledgeable. You have to consult with the experts. Internet Computer was $700 and now it's down $45. That's a heartbreaking news for an investor. $28. That's a heartbreaking news for an investor. Imagine that you put your savings there and you're counting on it at the end of the month or at the end of the year, and then you're now at 45.
And the truth is, we don't know where the bottom is for Internet Computer right now.
If it went down to up to 25.
We don't know if it could go below 28, maybe hit $10. The total supply is about 400 million tokens, so you can't really say for sure.
So I think getting into this market, it has to be with some disposable income.
Money you can afford to lose, basically.
Money you can afford to lose, well. All right, so like we always say, it's not a financial advice. So really you need an expert before you can go into this market. And I think Ladi always says it has to be a long-term. You have to be a long-term.
You have to try to be a long-term player because these swings will crush you.
That's why I'm waiting for Bitcoin to get to 10,000.
Yeah, I was going to ask my analyst today if your price prediction could hit, but I don't think we got it today.
We'll do that tomorrow.
I'll do that tomorrow. I'm going to put your price to the test.
All right, well, that's it on the program today. Thank you so much for watching, and do remember to join us at 1:30. We will have other discussion and updates from the business world during Business Incorporated. For now, I'm Ini John Mekwa.
And I'm Ladi Williams. Thank you for watching.